Hello everyone! Today we will analyze one of my trades on the BTC USDT trading pair from June 8th. We will conduct the analysis from high time frames to lower ones, form a bias and wait for a suitable opportunity. This trade is notable because I use double confirmation to open a position, which allows me to avoid unnecessary stop losses. The more trading situation you consider, the better you will understand the market. From my experience, I always conduct multiple reviews of all trades and note what I did right and where I made mistakes, regardless of whether the trade was profitable or not. So on this positive note, let's move on the chart and form a bias.
On the daily time frame, we observe a bearish order flow. The price is taking liquidity on the buy side, and the sweep leads to liquidity being taken from equal lows and forms a bullish order block.
At this very moment, I was puzzled that after formation of the order block, the price didn't continue its upward movement.
Please note this sell to buy move, which adds some uncertainty because the general price direction is bearish. The price respects bearish point of interest. However, we are currently in a bullish imbalance of the daily time frame. After forming this order block, the price continues to sluggishly move downward. Because of these ambiguous situations, I enter with additional confirmation on lower time frames, but more on this later. After taking liquidity and partially filling the imbalance, a new order block with imbalance was formed, and after fully filling this imbalance on lower time frames, a bearish order flow began. On the hourly time frame, there were no poise, so we are now looking at the 15-minute time frame. Here situation is clearer. The price is manipulating the lows, and I would highlight the range and deviation at the lower channel boundary. And see how the price is sluggishly moving upwards, forming a pool of trend liquidity. In this case, we have two liquidity pools above, and considering that the upper pool was formed from a mitigation block, I would not exclude its break. Notice that liquidity was taken from the nearest pool, and technically the structure has broken down. All of this happened at the opening of the London session. People who trade pictures on the chart would have gotten a stop loss here, since the technical breakdown and liquidity grab doesn't indicate anything. First of all, even the nearest liquidity pool wasn't taken out, and secondly, this breakdown wasn't impulse, and trouble areas below may react and continue the uptrend. I see that the price reacted from a bullish order block and on lower time frames broke the structure impulsively with an imbalance. On the 3-minute time frame, there was an opportunity to enter. We had a suspicion of continued upward movement with the first take at the main liquidity pool. But I don't trade such situations in real time. This entry is shown for example purposes only. On the 15-minute time frame, I have identified a particular order block. We mark this order block as shown in the example because it is the last candle that created this expansion. Additionally, another reason is that there are liquidity pools located above it, and if the price breaks our order block, it will also take away all that liquidity. After taking liquidity from the first pool, the price still continues to move in upward movement. After testing our POI and taking liquidity, the price reacted by breaking the first trouble area and structure. The price did this impulsively with imbalances and large candles. Now, the most important thing is that the price has filled a bullish imbalances, tested bullish order blocks and started a pullback. After testing our additional point of interest, the price reacted by filling all nearby bullish POI and initiating a 5-minute descending order flow. And what is very important? There is a large candle with imbalances and mitigation block. For me, this is an argument for opening a position. The position is open from the mitigation block and the beginning of the bearish imbalance. We place a conservative stop loss and aim for the nearest equal lows. There we will close 50% of position and move the stop to break even. But after the first take profit, the price reacted and there is a risk that the position will be closed by the stop. Therefore, I will do it manually. Our bias from higher timeframes was bearish. The price took a large liquidity pool and reacted, but after that we didn't enter aggressively. When the price tested the nearest point of interest, we enter a position on a low time frame based on the emergence of a new order flow with impossibly broken point of interest. In my opinion, this is safest trading method, or at least one of them. And by finding such situation, you will be able to be profitable with a high probability. If you like this video, support it with a like.